is Aishwarya from Money Control. Just read that the IPO was announced last year as well, and right now we are just announcing it. So can you explain what went behind, like why was there a delay?
We got the SEBI approval last year, but we never announced the IPO before this. This is the first time we've actually announced it. And we were basically, building up our books, doing our work. And we thought that this was an opportune time for us to launch. And that's why we decided to launch now. This is the advice of our two banks. We have, two of the most exceptional banks with us. We are happy to have them with us. And we have gone as per their advice. So as per the advice of our banks, JM and Kotak, we decided to launch.
Also in the prospectus, you mentioned about revenue CAGR from FY22 to 24 as some 4.3%. So what is the outlook like for till FY25-26, since the industry has an outlook of 11 to 12% logistics sector? So does your outlook also align with the broader industry outlook?
It's an excellent question, ma'am. You've answered it yourself. The industry is looking at growing at a fairly good pace. And we are hopeful that we have made all the efforts to actually be in alignment with what the industry is doing, and we hope to do well. We have a proven track record of having done quite well, both in top line and bottom line for many years, which you can see in our RHP. And we are hopeful that we'll continue to do well going forward as well.
So we expect a double-digit CAGR for revenue.
I can't make any forward-looking statements, ma'am, but our experience and our balance sheet as well as our books talk for itself. I mean, it's easy to collate where we are headed.
Thank you.
Thank you.
Good afternoon, Geetanjali Kedia from sptulsian.com. Is there a fixed asset turnover ratio you work on? You're mentioning you're going to carry a 150 crore capex with the IPO proceeds. So can you help us understand what does a company target as a fixed asset turn?
So really in our industry, because we are the assets light company, fixed asset turnover is not a measurable kind of thing. Normally we work for the customized solutions for the people, and that takes its own time from the proof of concept to getting the order. So that is the time taken. And once we get the order, those are the kind of growth drivers for the company, not the fixed assets turnover ratio. Let's say we only acquire those assets which is required critical supply to our customers.
I am also asking this because you've already undertaken 60 crore capex in the past 2 years, and yet in FY24 your revenue was flat. So I'm trying to correlate the capex with the growth, because clearly industry was not flat last year when you were flat on the top line.
Actually, we're not flat, ma'am. We've grown about, I think, 5 or 6%. We faced headwinds last year because of the export cycle, especially what happened in the Middle East. So the EXIM numbers were flat. Those were actually taken care of by the growth in our domestic numbers. And the capex that we have done over the last year or so is basically to make sure that our capex cycle that we had planned when we had done the DRHP is taken care of. So we've actually not delayed our capex. We have done the capex in the specialized containers, which is our main focus area. So we've done that capex over the last 2 years of, I think, 30 and 30 in the last 2 years. So that 60 crores of capex has already been done.
So what is the reason for margin expansion? I believe export-import is a higher margin than domestic, and you said FY24 EXIM was softer and domestic was higher. So yet your margin expanded. Can you help us understand what was the reason for FY24 margin expansion?
Ma'am, it's basically a mix of 2 or 3 things. Like to have a storm, a perfect storm, you need about 8-9 things to come together. Margin expansion is like that. We're basically reaching a size and scale in which our debt freights are coming to a minimal point. We are not losing a lot of money in debt freights or re-logistics or triangulation, and that is actually helping drive our profits forward. So the more volumes and more efficiently that you can do your work, your profit margins will improve. Let me give you an example. Suppose you had to run a train from, and I'm just giving you a hypothetical, from Bombay to Delhi. But when you reach Delhi, you don't have the return load for that train, or you needed to send the containers to maybe Hisar or Punjab or something. That adds to your first mile costing. So if you are able to actually triangulate it in a nice way, in that you send your cargo from Bombay to Delhi, and at Delhi you have got return cargo ready for you, that will increase your profitability, not only in the terms of dollars that you earn, but also in the times of efficiencies, because you will not be wasting time. So maybe instead of doing one trip in a month, you can do 1.1 trip. So these are the things which are helping us in actually improving our profitability, and it's been improving not only last year, it's been sequentially improving for several years, because now we are reaching a size and scale, ma'am. It took us almost 45, 46 years to reach the first 1,000 crores of revenue. I can assure you it will not take me another 45 to reach the next.
Sure. So is there scope for margin expansion further? Because the peers which are listed are almost in double-digit net margin, and you are still around 5%. So
Absolutely, ma'am. You've answered your question yourself. There's always scope, and the better that we get at our work, the more volumes that we are able to triangulate, we should be in a position to improve further.
One last question. I see a risk factor saying that Western conglomerate was suspended from Calcutta Stock Exchange for almost 7 years. Do you want to just throw some light on, because it's the same promoters of that company, and this is for non-compliance of listing agreement?
Yeah, so this was some documentation problem. It's all already been completely covered in our RHP, and everything with regards to conglomerate is online now. There is nothing which is pending.
But it took 7 years to comply with those requirements?
Correct. We've complied with everything, ma'am. It's all covered in the documents.
Thank you.
Thank you.
Hi, I'm Mehul Dani from FinTech Biz News. Do you find the government policies conducive for the growth of the industry? Any suggestions for improvement in terms of infra, in terms of other supporting services?
मेहुल भाई, मैं अगर आपको बोलूँ तो what this government has done, like if I had a wish list, it is exactly what they have done, sir. I'll give you examples. They have come out with schemes like multimodal logistics parks, dedicated freight corridors, direct port deliveries. These are all things which are major benefits for multimodal logistics players like us. So the groundwork government has done, sir. And multimodal logistics, the space that I am in, is, we are at the tip of an iceberg. If my positioning is that I am the largest 4PL player and my top line is not even 2,000 crores, आप सोच सकते हो कि इस धंधे में स्कोप कितना आगे का. Because see, the more, sir, Mehul bhai, simple hai. It took us, 40 years from our independence to hit the first trillion, maybe another 20 years to hit the second. But the third trillion came in 7. Right? That's what I'm talking about. The size and scale of our economy and the positioning that the government has done with these several schemes is perfect. I mean, we are at a cusp of something really exciting for the industry.
There are some questions from journalists who have joined us virtually. The first one is, you have mentioned certain peers who operate in the B2C space. What is the difference between Western carriers and other peers who are in the B2C space?
It's a good question. We don't have a very large exposure to the business to consumer side. Bulk of our revenues come from business to business, and that's where we are growing. Having said that, we have grown our B2C or MSME business from scratch to about 12-13% as of the last balance sheet, and we hope to be going down this path. So that's the major difference between us and, say, the peers, that we've been more of a B2B focused company.
Second question, you mentioned in your strategies that you will be expanding infrastructure. So will this be on the client location side or your own different hubs?
It's a great question, sir. Most of the work that we do is at client locations. We do not invest in creating our own hubs per se. And so whatever optimizations that we do for a customer is usually at his plant site or at his delivery point. That's where most of our focus and assets get deployed.
You mentioned that you'll be expanding in new sectors as well as new geographies. So can you throw some light on this?
So we are working, we do a lot of proof of concepts with our customers. We are, we've started working in the industrial chemicals side. We started working in the MSME side relatively recently. We are also, expanding our footprint. We work pan-India, but we are getting deeper into the supply chains in the country, as well as looking at markets close by, the SAARC markets like Bangladesh, Sri Lanka, Bhutan, Nepal, which basically from an India perspective, basically goods going from India to these countries. So those are some of the focus areas for us for the next remaining part of this decade.
One question for the BRLMs, is this the first multimodal or 4PL company coming into the capital market, and what is the right way to value such a company? On what metrics?
Actually, I can answer that. So as a segment, this is a large segment, and to that extent there are other peers, as we have also included some of the names in the document. In terms of the valuation, I think there are different ways in which the valuation is done. There are different methodologies that are done, including the fact that we look at fundamental analysis, discounted cash flows, looking at the peer multiples, whether it is on a price to earnings basis, on a EV to EBITDA basis. And also one has to look at not only the historicals but how the business and the scope is there in future. So a lot of these factors do come in when the valuation is decided.
You also mentioned in your strategies that there are some inorganic growth opportunities which are possible. What are these growth inorganic growth opportunities, and what is your view on that?
So we are not currently actively pursuing any inorganic growth opportunity, but several of these come up over the years. There was a transaction which took place about 2 or 3 years ago when one of Government of India concerns called Transsafe, which was into containers and container manufacturing, was hived off. There was a opportunity a couple of years ago when a large private container train operator sold its assets. So those are things which are there in the market. Are we actively looking at anything? No, not at all, sir. But if something comes up, will we look at it? Maybe, but it's hypothetical.
Now let me invite Mr. Kaushal Shah, Managing Director, Equity Capital Markets, Kotak Mahindra Capital Company Limited, to give the closing remarks.